All right, so start off the weekend report with the stock market. We did get all new all-time highs in the S&P on Friday. That's what we've been expecting all along, that we would at least test that, maybe marginally break above it. Um, I don't think we're going to get a top before the FOMC meeting. Um, Maybe we get a top after that, but I don't think I still would not be trying to short the stock market. Um, we've seen what happened in the semis. That breakout was valid, and we've got some big follow through, despite extreme sentiment levels, which sentiment just isn't a valid reason to try and short the market, especially if there's a never-ending stream of liquidity being pumped in. But I will say that we're getting too stretched above the 200-day moving average again, and this usually can't go on too terribly long before you get some kind of corrective move. We're getting very late in the intermediate cycle, unless the intermediate cycles are starting to evolve again, and something like this is becoming the norm, 40 some weeks instead of 20. If that's the case, then we could have many more weeks to go before this tops. Um, I wouldn't, clearly I would not be chasing the stock market right now, be waiting on the sidelines, but we'll get a pullback some point here, and we'll get an entry to go back in, because we've got a lot of years left in this bull market. Um, and kind of pretty strange, as the stock market has made new all-time highs, the McClellan oscillator has not been able to even recover zero. Um, I would take that to mean that there's underlying weakness in the market, and probably the only thing holding this up is the Fed is probably propping the market up into the FOMC meeting. So I think we've got the potential here for a top, but I really don't think there's much chance of it happening until after the FOMC meeting. And the risk, of course, is if they push the market through those all-time highs, the breakout could be sustained, and in that case, you don't want to try to be shorting the market, even though everything is suggesting that we should get a top here pretty soon, and at least a daily cycle correction, and realistically we should be getting an intermediate degree correction here. So what I expect is a top sometime after the FOMC meeting, and then I think the second daily cycle is going to stretch really long, and we're going to get our ICL as some kind of a mini crash event, maybe that comes back down to the 200-day moving average. Um, as we move into May, that's kind of what my expectation is, but I'm also going to keep an open mind that maybe we get a breakout and a sustained breakout that doesn't look back for a while. So again, I would not be trying to short the market. I wouldn't be um, I wouldn't recommend any of the VIX ETFs right here until really the only time those things work is when we're in an intermediate decline. And as we've seen, it's not easy to pick a top in a market like this. And if we break out and the breakout is sustained, then those VIX ETFs will continue to decay, and they can decay to the point where maybe you cannot make a profit if you get in too early. So they're dangerous. They're hard to play. You've got to pick a top correctly, and in a market that's got a Fed put under it, who knows when that top is going to occur. Okay, so here is the chart of the VIX, and you can see we're not even really close to some of these lower levels that we've seen before, and the market can get down here and stay pegged in this zone for a long time. So I think it's dangerous to play these things. Trying to pick a top in a central bank protected market is just tough, and those things can decay severely. And especially if you get something like this where the VIX just stays pinned at, at around 10 for months at a time, you end up with a lot of decay in those ETFs. And then, unless you get, a huge market crash, then it's just impossible to recover. All right, so moving on to oil, our patience looks like it's finally starting to pay off. We got a big move back down through the 10-day moving average, and we briefly penetrated the intermediate trend line. That could possibly mean that oil is starting an intermediate decline. And if stocks do decide to finally move down at least into a daily cycle low after the FOMC meeting, that could exacerbate the move, and potentially we could re-enter an oil trade, maybe somewhere back down here around 60 where we got into it, or maybe even lower if this turns into an intermediate decline. Remember, an intermediate decline will usually penetrate the 10-week moving average, and more often than not, it'll turn the 10-week moving average back down. So I think I would, I wouldn't try and necessarily pick a bottom real quick here. We'll see if we get a weekly swing next week. If we, by early next week, we've moved below last week's low of, what do we got here, about 62.20. If we move below that, create a weekly swing, then a little patience, see if we can't come down and break below this 10-week moving average, maybe turn the 10-week moving average back down, and then at that point, I think I would just use the same system we used here, wait for the daily MACD to cross back up, and then that would be your entry. But I think we're going to get another opportunity in oil here in the weeks ahead. All right, so gold, on the other hand, I think might be completing our intermediate cycle low. We've got a nice reversal candle here on gold. Let me see if I can't pull up a chart of the miners. So, a nice reversal candle forming in the mining stocks as well. If we can get a move above this weekly high early next week, so in miners it would be above 21, let's call it 44, somewhere in there. If GDX can move above that next week, odds are good that we're going to form a weekly swing. This intermediate cycle is very mature. I would say the odds would be very high if we get a weekly swing that we've got an intermediate bottom. So for those of you that have been a little bit more cautious, maybe waiting for this weekly swing, I think that's what you want to look for. And patience in the metals market, I think, has probably paid off, and I think we're probably got an ICL here. Now, let me move back to gold. We can go to the daily chart. So if you are long, I'm going to say you want to have a hard stop right below this, what I think is the daily cycle low. I don't really expect this to reverse. This looks pretty convincing to me, but if it does, if we open Monday to a big attack in the metals market and we get pushed back down, and if we break this, then that would put the a bloodbath phase back on the table, and at that point we would have 5 to 7 days of decline. So normally I wouldn't stop out really late in a daily cycle like this, but in this instance I think you should. If this pivot right here gets broken at 1267, I think you should stop out of long positions, as the odds would be high at that point that we're moving into a bloodbath phase, and you would want to get on the sidelines for that 5 to 7 days of the bloodbath. But I don't think that's going to happen. I think this looks pretty convincing to me. I think we've got a daily cycle low here. I think this is also an intermediate cycle low, and I think it will also turn out to be a yearly cycle low. So I think gold is starting the second intermediate cycle of this new 3-year cycle in the commodity complex. And I think this intermediate cycle is going to be a pretty powerful one. And the fact that silver broke out strongly above the intermediate trend line on Friday, closed at the very top of its range, another confirmation that we probably did get our intermediate cycle bottom right here. So I'm pretty confident that the opportunity we have been waiting for in the metals has arrived. Um, I think probably most people are either in or have partial positions. If we get a swing on Monday or Tuesday, and technically you would need to wait till Friday to make sure the swing doesn't reverse, but I think you could probably pull the trigger a little early. And if we get a move above this week's high, which is basically a follow through from Friday's move, that would create a weekly swing. And at that point, I think you've got enough confirmations to be confident in pulling the trigger that we've got an intermediate bottom here. And like I said, just have a hard stop right here. If that gets broke, it would be an indication that we are going to start a bloodbath phase and break that intermediate uptrend line. And you would want to just get on the sideline for 5 to 7 days, and then hopefully you could pick a bottom, down here somewhere else, and you would have even more potential to the upside on that trade. But I don't really anticipate that we're going to trigger any stops below this unless we just wake up Monday morning and we've got a huge attack that erases all of Friday's gains. I would say that would be the warning bell is if we erase all of Friday's gains early next week, then maybe you don't even need to wait for this stop to trigger. Maybe you go ahead and stop out and get on the sidelines and wait a few days and see what happens. But um, looks pretty convincing to me. I think we've got an intermediate bottom. All right, so stock market, we're going to have to wait a little bit longer. Oil looks like we're going to get an opportunity here in oil in the not too distant future, and we appear to finally have a top in that market. And the metals market, I think our opportunity is here, and I think you should pull the trigger on the metals and just have a hard stop below this below Tuesday's low. All right, that's it for the weekend report.